let's turn to our stock of the day. Now, I was actually asking both our experts where they'd want to be in the energy sector given what is going on in that space at the moment. So they've come up with Woodside. In fact, it was Jonathan's pick. Andrew's going along with it, so we'll get his analysis in just a moment. But obviously, given what's going on, particularly with oil prices surging after Iran attacked Qatar's energy hub and threatened several energy facilities across the Middle East in retaliation for a strike on its major domestic gas field. And so Woodside is the stock, obviously is the largest energy listed stock on the local index. In fact, news today, it's appointed former Anglo-American Chief Executive Mark Cutifani as an independent non-executive director. And at the same time on Wednesday, Liz Westcott was confirmed as permanent Chief Executive and Managing Director after serving as an interim basis since December when Meg O'Neill left to go to BP. So, Jonathan, this is the way you want to play energy?
Yeah, absolutely. I mean, like the other alternative is actually just to speculate on the actual share price, the barrels price per day. And there's a good ETF called O that you can do that. Okay, so O was trading, I think, in the high fives before this whole thing erupted. It's trading 950 now, so that could be another play. If you think this continues and oil reaches that 120 a barrel again or even higher, that's another way to play. Woodside is my preferred energy stock within the actual play. Obviously, we've got the new CEO in play and a movement around the board. But just looking historically, it's actually been much higher. So back in 2022, on a market cap basis, it was trading around 70 billion market cap. So even though it's had a massive run in the last 3 months, there's actually plenty more upside here, because obviously if energy prices continue to stay high, let's just say the new normal is around $85 a barrel. That's actually a lot higher than most energy analysts have the Woodside pricing at. Most analysts actually have Woodside as a trim or a sell at these prices. They have targets around the 30, so we're actually well past that. But if you look at under the hood, most of them have, on the high side, a target of say $75 a barrel, and that's where they base their valuation on. So if we are in a new normal or a new paradigm where $90 a barrel is quite or cheap or the going rate, then Woodside definitely heads back to 70 billion market cap from here, because the analysts have it mispriced. And it reminds me of the situation back when CBA was running last year. Like everyone had targets around 100, 120, and it was trading 170s and heading higher at that price. So it seems the analysts have got this one wrong, and I think that the situation in the Middle East, unfortunately, will continue, and the Straits of Hormuz stay closed for a little bit longer than the market wants. And so Woodside continues to benefit from that.
And so you'd buy at this level?
Yeah, absolutely.
Yeah, okay. Andrew, now we know you guys don't really do commodities. Nonetheless, what are you saying?
Yeah, I mean, look, we don't do commodities for exactly the reason we're talking about commodities today, right? Which is that they're hugely volatile and hugely cyclical, and your ability to predict where they're going to be 5 or 10 years from now is entirely throwing darts at a dartboard, drunk and blindfolded. Not because the exercise is not an interesting exercise, it's just there's too many things outside of your control. So for someone who wants certainty and or virtual certainty of returns, it makes the commodity sector very hard to play. But if you do want to play in the commodity sector, you always want to be in the best run business with the lowest point of the cost curve at a time when the PE is in your favour. And whilst I wouldn't want to be in the energy sector, because I can't predict what's going to happen next week, Trump can't predict what's going to happen next week, Woodside does tick all those boxes. It has assets off the coast of Australia that are at the bottom of the cost curve. It's got very good and long-term success in management. It's got little or no debt, and it's currently on a PE of 14 times, which whilst that share price has run up, hardly says it's in euphoric territory. If you think the market average is around 20 historically, 14 is still well below neutral. So from that point of view, if you're going to have a play and you want to be speculative, you could probably do a lot worse than Woodside. So I think Jonathan's picked well, but my general rule at Teaminvest is avoid the sector.
An avoid, but can we call it a buy then, if you really want to go there?
If you want to gamble, it's probably better than putting your money in the pokies.
You're a gamble. All right. So that is the view on our stock of the day, which is Woodside.